Welcome to episode 251 of The Numbers Game. I'm Jace. I'm here with Nick and Marty. And guys, I want to open up with a question to you guys. What does 600 million have to do with the ATO? The number 600 million.
Oh, 600 million.
600 million.
Is that how much they gave away, JobKeeper? Is that what we owe them?
No, we're at 53 billion, Marty, in debt
Good
for so 53 billion in debt. So no, 600 million. Oof, I think the government would jump at that number if they could have that in debt, lock it away, all done. 600 million is also not the number of help debt and HEX debt reduction that's been passed in Parliament. The 20% help debt reduction.
Stop teasing us. Come on.
No, guys, 600 million is one of the recent estimates of the amount of data points that feed into the ATO, all the information that the ATO have on the general Australian public. Now, the headline and the reason this one kind of came to light a little bit more is that one of the most recent businesses that has come on board and started feeding and developed the technology and the AI and everything that it needs to feed the data in is actually, do you guys want to guess the business that is now giving the ATO data about its customers and users?
It's not Palantir, is it?
RedTube.
Very, very, very close, Nick. It is OnlyFans. So OnlyFans, and this, we don't laugh about the ATO's access to data. This is a genuine warning to the general public out there. And there's a specialist accounting firm called Empire Industry Finance, I think it is, something like this. They look after OnlyFans models and people who use OnlyFans to generate income. But for people out there who maybe haven't been working with an accountant and, they're on OnlyFans and there's some side income like any other side hustle, the ATO is now being fed the income that you are earning, the gross revenue that is coming through your OnlyFans profile. Now, I use that as an example because, realistically, it's just another one that's added. You think about Airbnb, DD, Uber, Airtasker, Fiverr, Upwork. There are so many different companies out there. Etsy, eBay. So Marty, I see your little James Hurd thing on the wall there. I think it's Hurdy, but
Yeah.
if you decided to go and chuck 100 of your framed things on eBay and you started to make a profit on that, and maybe the ATO decides it's not a hobby anymore, Marty, you're running a business. eBay is sending your user ID, your sales records, that flows through to the ATO as well. And maybe one day they decide that your little picture frame selling hobby isn't a hobby anymore and they come after you for some tax.
Well, hang on. I was about to flog this picture. So what are you saying? Can I do? No, I'd only get $20. But what is considered a hobby is like a one-off. Define the lines of hobby and business.
It's very grey, like our entire Australian tax system, Marty. It is a very grey self-assessment system. No, to give you the answer on that, a hobby is genuinely something that you're not trying to run an enterprise to make a profit. So if by the time you make some goods that you're going to sell at the local market and it costs you $10 to make them and you sell them for $11 and it buys you a cup of coffee after the market, probably not really an enterprise that is a profit-making activity.
Really?
So you need to... Well,
I mean, that's grey because just described business.
It is grey, yeah, but yeah. Well, I mean, again, anything that looks like a business and is like a business and has the makings of a business, you've got to be careful. Register an ABN, declare it anyway. Show that it's break even or a loss. But yeah, the hobby versus business thing is something that comes up all the time. An example, and this one, I need to check if the ATO gets this data, but we had a customer that buys and sells domain names, and I didn't know about it. They kept it off to the side, and all of a sudden they'd made a seriously big win on a domain name that sold for tens of thousands of dollars. And when I questioned whether we were declaring that in the tax return for that year, I was told, no, it's a hobby. And then once I unpacked the sheer volume of domain names that were being bought and sold, I'm like, far from a hobby. That's an enterprise. Like, you are deliberately buying and selling domain names to make a profit.
So is there a I'm just thinking
dollar value threshold?
Yeah, is it transactions? Dollar value?
It's Marbo. It's the vibe.
Intention?
If your intention is to generate profit and make an income, you're running a business. It's not a hobby anymore.
License plates are the same. There's a lot of people into that game, buying and selling car license plates.
Yep, correct. So getting back on track, because this stuff for me, we can go all different directions. So essentially, what I wanted to get to was share a bit of information of why it's important and why this matters to everyday Australians, because there is a lot of taxpayers out there that'll either lodge their own tax return or they'll go to an accountant like Future Advisory and many other good ones out there to get their tax return done. And their accountants will ask them questions and ask them for records. And a lot of the time clients will say, yeah, that's the number, all good. But I wanted to kind of share why it's really important to get these numbers right. And essentially, one of the main ones is obviously the ATO uses these 600 million data points to pre-fill your tax return. And then it gives us accountants a bit of a head start to go, we know your single touch payroll information or your income statement, used to be the old pay-as-you-go withholding summary. We know interest withheld from banks. We know usually your private health insurance details. We can see if you've bought and sold shares, and I'll get into the detail of just how much info this is. But essentially the reason the ATO is building out more and more capability in this area, they've invested a lot of money into AI, machine learning, and big data capability. And as a result of this, what has ended up happening is last year alone, nearly 500,000 tax returns were automatically amended and changed on behalf of the ATO. And then the people who messed up their tax returns were sent a bill. So if you can imagine that this is only going to get more and more advanced as the ATO's data matching capability continues to turn on and ramp up. If it was 500,000 last year, imagine how many more numbers we could get to this year with all of the activity around cross-matching income streams. And
so they're not feeding this information to you, the ATO?
There's both versions. Yes, we get a lot of it, but not always in time by the time we lodge a person's tax return. So you've got to also remember that a lot of people rush to get their tax return done because they want their refund, which then means that the accountant has to go, hang on, your income protection number, for example. Are you sure that was your income protection premium? Yep, all good. I checked with my advisor. But if it's not, income protection data goes to the ATO. ATO data matches it. You put in $200 a month, but it was really $188 per month less the non-deductible part for life insurance or whatever it ends up being. So there's some pretty differences that don't seem like a lot, but all of a sudden, if it starts to add up that you're putting in the wrong information in your tax return, you pretty much become a pretty easy target for further ATO scrutiny for an audit, for example, where then you're going to have to show you kept all your receipts for your tax deductions and so on and so forth. So you don't want to be in that boat. You want to make sure the data you are matching definitely matches what the ATO is going to end up with. And unless you guys have any questions, I'll share you in where some of it gets a little bit prickly and interesting as we kind of go into it. Any questions in the meantime while I find my exhaustive notes to talk to you about?
I think you're about to answer it, but I was going to say how correct is the data the tax office is getting on people? Like, is it to the T?
Yeah, look.
Because I would hate to think we'd be wasting time back and forth on stuff that's not actually to advantage of everyone.
Well, Marty, I'm definitely not an ATO spokesman. I'm definitely not out to bash the ATO, but sometimes with machines and AI, these things go wrong. So what you've got to imagine is, from a data matching point of view, where these things can go wrong is human error as well. So let's say you've got an investment property and it's in your name and Colleen's name, but for some reason, the real estate agent only puts your name on the document for your income and expenditure statement. If the ATO is then expecting you to declare the full income of your investment property, but it half goes onto Colleen's tax return, you may get triggered an automated amendment or a question for a review because you didn't put the right income in as what the ATO was expecting. But it's not the ATO's fault and it's not your fault. It's part of the data matching process fell over because the wrong names were put on something.
Yeah, okay.
That's a little example. I'll share you through a bit of a list of where this stuff starts to get pretty crazy. Obviously, we touched on it before, but Uber, Airbnb, Fiverr, Upwork. Some people start a little Fiverr or Upwork account thinking it's a little bit of a side hustle for some extra cash. They can build some, do some stuff on the side, and especially graphic designers, things like that. But, in the past, that was some little slush money that came in on the side that people might not have been declaring. It now is known by the ATO. You're not getting away with it. You need to declare all that information. The details they're getting is, your income earned, your user ID, your activity records. So also think about it. If you've got an investment property that you Airbnb and you tell the ATO it was available for rent 300 out of 365 days, the ATO gets the data from Airbnb if that property was available for rent or not. So you got to remember that if you're not pro-ratering the private use of your holiday home, the ATO will end up with that data and be able to pretty much scrutinize what you've lodged and then amend to ensure you're not getting a bigger deduction than you should have been, as an example of what happens with the rideshare and Airbnbs. And they're a big one. That's a big one because a lot of people do have a holiday house that is privately used but also Airbnb'd on the side. If you get those numbers wrong, it severely impacts the deductibility of the interest on your investment property loan.
Jace, what should we be doing with the vehicle log in regards to cars for your business, in regards to tracking kilometres effectively for the tax office perspective? Because that's always been one where people have been writing in logbooks. And I know there's tech now that can lock in.
The best tech I say, and I'm all for using tech to automate it. It's called Driver's Note, and you can subscribe to it and they send you out a Bluetooth dongle that can sit in your car.
Yep.
And it means every time you get in and out of the car, it sends the data to your phone so you can then, it has a pop-up that says, was that a business use or private use?
Right.
And for 12 weeks, you use your Driver's Note app and technology to record your 12 weeks worth of driving, and that becomes your logbook for your motor vehicle claims. Again, though, if you've got a novated lease, don't try and get cheeky and claim a tax deduction for your car as well, because the ATO knows about your novated lease. They've got that data too. But great question.
But basically, you could, it'll track from when you're at the office to where you're going, and then you would document that on the app.
Yeah.
That makes sense.
Bad idea, Marty.
Have you got that?
No, I'll stick with the logbook, thanks.
Yes. I was about to say, some people don't like the technology side where everything is IP address here and IP address there.
Okay.
They may like to be a little bit more loose with their logbook entries.
But 600 million points, I'm going, you know what I mean?
You want to get it right. And I'm here to say you do want to get it right. I've seen audits or reviews where the ATO grabs the logbook, and if they can pick the wrong date, the wrong time, the wrong amount of kilometres, they'll throw the whole thing out and just say, no, like that, you obviously didn't do the logbook properly. So and a motor vehicle claim can be one of the biggest things you can get as an employee, especially if you're in trades or you're in sales and you're genuinely driving a lot for work. You want to be able to claim everything you're entitled to get the biggest chunk of your tax refund back that you're legally entitled to. Some of the other ones, I can get through because there is a bit of a list. Cryptocurrency. So since I think 2019, there's been millions of cryptocurrency transactions that have been fed through to the ATO. When you think of if your wallet is with CoinSpot, CoinJar, Binance, these are all platforms that are sending your personal information, your transaction details, your wallet addresses, transaction dates and times, transaction types, and the types of coins, all fed to the ATO. So I think initially when, cryptocurrency came out, it was seen as a bit of I'm going to keep this private, cryptocurrency is designed to buck away from the system a bit. Essentially, it's a legit, if it's going to continue to be legit and continue to grow, look at the price of Bitcoin at the moment. It's just going off. So, but keep in mind, where big Bitcoin prices, for example, you transact or move that and you've been riding it for a long time, big CGT event and essentially potentially a big tax bill. So you don't want to get that wrong and have the ATO come after you a few years later. And another one where we've seen people really get in strife is they've made a big Bitcoin gain, but they've moved it into another coin, which is then dropped in value. The ATO doesn't care that you lost money after the fact. The ATO recognizes that you made a capital gain. So then let's say capital gain happened first, you got a tax payable. Capital loss generally for some of these people happened years down the track, but they never actually cashed out the money. So it's a real sad situation where you might have a couple of $100,000 tax bill, but you never actually recouped the cash. Now, these are some war stories from in the past, but again, the ATO has the data. The ATO will eventually catch up with you if you haven't reported your crypto transactions properly.
And to be clear on the crypto stuff, there's no grey area as to whether or not it's a hobby. One transaction on crypto is
it's investment
income.
I'll stop you there and move back a little bit. There is purchasing of crypto for personal use asset. So if you genuinely put some money in, I think the value is under 10,000. I'll check it and then verify this. But look up personal use asset cryptocurrency. That's where you need to look up and understand. If you deliberately, it's like how do I put it? If you put money into Bitcoin because you were going to spend it, and it went from being worth 5,000 to 50,000, you can spend that 50,000 and use that for a renovation, whatever you wanted, because it's a personal use asset. You bought it to use personally to buy something. The change in value to certain limits falls under the personal use asset criteria. So check out the thresholds on all of that. Definitely worth looking into, because some people, I had a client reach out that did generally put some money into crypto, not because they wanted to hold on to it and make a capital gain. They put some money into crypto to spend it. It was cash for them to spend. And now it's gone up in value and they're going to spend it on a renovation. Again, personal use asset. So good question, Nick, and one for everyone to kind of understand.
Very good question.
Now, beyond that, look, I mean, as I said, 600 million data points. I don't want to keep you guys here too long, but it's, for me, I'm super interested in this stuff and I deal with it every day. So hopefully there's a bit of
Jace, talking about historic transactions, is the ATO focused on looking back over 2023, 22, 21, 20?
Fantastic and absolutely bang on question. It's actually, that's the years at the moment the ATO is trawling through that data. So essentially there is such a backlog. Again, think about these hundreds of millions of data points. It also means it takes time to cross-reference, cross-match and ID things. And unfortunately for the accountants and the professionals out there, this is causing extra work for us. And sometimes it's not always right, like I said. And a real life example is we are currently getting letters for 2023 tax returns where the ATO is saying to me that our client got it wrong and the ATO is going to amend unless we say otherwise. So if we don't respond to these letters, the ATO will automatically change it and send a bill to clients. Now, luckily, as proactive accountants and advisors, we are then contacting our clients. This example one was Medicare levy surcharge. Our client definitely had private health insurance. We put the private health insurance on the tax return back in 2023. But since then, the ATO has come along and said, no, doesn't match the data we've received. You're not getting the Medicare levy surcharge offset. You're going to pay the Medicare levy surcharge. So we've now had to go to the client, request the statement and provide the statement back to the ATO to say, sorry, whatever data you've got is wrong. Here's the physical source document. And then now that should stop the ATO from automatically amending. The warning, I guess, to people out there is if you don't have an accountant, if you've lodged it yourself, or your accountant may be busy and can't get to every bit of mail the ATO sends and they've forwarded it on to you without necessarily having a good look at it, you need to be vigilant across ATO mail because they automatically sending these auto amendment notices to you. And if you know that you're in the right, you need to contact them back and say, no, don't amend my tax return. I've got the data that says I'm correct and here it is. But that's happening. People are getting bills to pay, and so I've seen somebody just pay it, not argue it, not question it, just go, oh, well, I must have given the wrong info. I'll pay that tax bill. Definitely a big issue out there, and we can use all the technology, the AI and the machine learning to try and make this process easier and better, but it is still going to get things wrong and require humans to come back and determine what was right and what was wrong.
True.
Next one's an easy one, but financial institutions, your bank is sending your data, the data to the ATO. So interest earned on accounts, dividends received, financial transactions, opening and closing bank accounts and loans. Gets the information's generally for interest earned is fed into the tax return. What's not exactly fed in is interest expense. So if you've got an interest expense on an investment property loan, where you need to be careful though is redraw. If you've got a redraw on an investment property loan and you've paid it down and then redrawn, that is a huge no-no, obviously, because if whatever you've redrawn it for is then, if you've paid down the value of that loan, you've reduced the tax deductibility of that investment property loan. If you redraw money back out, it doesn't mean that you've refreshed that loan and you get to claim the deduction. So one to watch out for, the ATO has this data.
So they've got the data on balances, but they're not feeding the interest data through?
No, so interest expense, would make sense, wouldn't it? If they've already know the interest expense, just populate it into the rental property schedule, but they just don't have the connection to that. So interest income is a very set, item and it's, fed in. When you think about it as well, though, one particular loan might be used across two properties. So you might have the one loan with the bank, but part of that redraw has then gone to another property. So yeah, as much as some of it would make sense to just pre-fill straight into the one particular rental property, unfortunately, it's not that easy. And then you've got multiple loans for some. But again, it's one where we've seen people get it really wrong, where the loan might be in only one person's name, but the investment property is in husband and wife's name. That doesn't mean you get to split that loan in half and claim it on both rental schedules. It means that sometimes there's a non-deductible portion of that loan. So structuring your loan properly with your mortgage broker and making sure your accountant's aware of what's happening is a big top tip there. Beyond that, insurance companies. So this is where, from an audit activity point of view, this one always kind of gets me. If let's say you're in a bit of an industry where there's some cash and you decide to buy a jet ski or a boat or a nice hobby car for the weekend, and you go and insure the jet ski and the boat and the car, the ATO gets the insurance data. The ATO knows the value of property that you have insured. And if your taxable income doesn't match the taxable value of all of the property that you've insured, there's some flags and alarm bells that the ATO could consider auditing you to understand why your taxable income doesn't match the taxable value of properties you've got. Beyond that, in insurance though as well, you guys will be well aware of income protection insurance. Your income protection premiums are often tax deductible, but sometimes there's little bits in there that aren't deductible, that to do with life or TPD and other amounts. So it's very important. Our team are usually annoying the Innovate team saying, hey, can we get the letter for what is the deductible premium? You need to make sure you get that because the ATO knows that after the fact. Again, it could be a couple of months later, but the ATO has that data and can be a bit of an annoying one to unravel. Big one here, and this one was not news to me, but I never kind of overly thought about the implications. Services Australia, Department of Home Affairs and State Revenue Officers. So government agencies cross-share data, obviously with ATO. Obviously for income support payments, if two people are living together, but one of them said they're a single parenting payment, but they're now living with somebody else, raises some alarm bells of whether they're a single parent anymore. And then visa records, your residency status and how long you spent in the country can determine whether you're an Australian resident for tax purposes. So for some people that are digital nomads or moving overseas or, have gone somewhere for a longer period of time, but then decided, the Australian tax rate's better, I'm going to come back to Australia and sort my tax return out. The ATO can have the data that shows how long you were out of the country for. And then they may have some questions about what income were you earning overseas and are you declaring your worldwide income in Australia? So ATO is watching, guys. There is a lot of data and info there.
Yeah, people even buying property in their self-managed super fund and then working overseas. I know there's criteria around how long you can hold that for, and that information is in real time now. Back to the ATO office, so you do have to be careful on stuff like that.
Yeah, but that was my next one: property and investment data. The properties you buy, the properties you sell is all fed to the ATO. The price that you bought it for, the price that you sell it for. State government usually has the stamp duty amount. So, again, if you get it wrong, the CGT that you've put in, if the ATO wants to review it, and again, they don't have all the power in the world to do all these things, by robots or AI. But again, if you're selected for a review and you've put in the wrong information, it's not too hard for them to figure that out based on the amount of data they have on their side. Also comes with, rental income, investment earnings. All these things need to be really accurately done for tax reporting because, ATO's got access to the data. If they want to figure out you've done something wrong, they can, and they will. And that's where, as I said before, getting the names right and the ownership records right for properties is really important too. Now that, the income and expenditure statement is being from a real estate agent is going to the ATO. And I can't tell you how many times it's caused an issue in the early days of the loan is in one name, the property's in somebody else's name, and the real estate agent put something else in a different person's name, or the spelling and overall, of it all. And it just creates havoc in all the data matching and causes way too many phone calls and record requests.
So Jace, I've got no problem with the tax office getting their legitimate taxes and, finding what the real truth is of the matter, because that's just fair and reasonable business. What interests me is just the education piece to people in regards to how is this being communicated to people in the general public so they can be doing, well, they should be doing the right things, but not everyone probably would be, but how that can best work in with the ATO. Now, is that the accountant's responsibility to educate? Are you the middleman in this, that you're trying to piece it all together for both sides, the sort of the meat, like the middle ground? Like, where's this responsibility like? Because it lies really with the client, doesn't it? With the person.
Yeah. Yeah, look, at the end of the day, it ends with the taxpayer. Taxpayer signs the return. Taxpayer lodges their own return. ATO is a self-assessment system where the taxpayer is given a lot of trust and faith into lodging their records accurately and correctly. Yes, but I also then believe from an education point of view, the ATO and the general accounting profession, CPAs, CAs, public practice accountants, we all have a responsibility to make sure we're sharing the appropriate information and giving the appropriate warnings to our customers or our clients that are lodging through us. And I say us as in the whole accounting population. That you got to get this stuff right, and you've got to give the appropriate warnings to clients when, hey, look, I've done tax returns for people before. It's like, yeah, Jace, everything's the same as last year. Just bang it all through. It's like, hey, I get it. Everything may be the same, but last year you bought a pair of boots for $220. Were they exactly the same price again? Sorry to be a pain in the ass, but I don't want to put in $220 if they were $250 or $190. And I know that's, a stickler, but
tell me something, Jace. One more question.
Yeah, mate.
In regards to audit insurance, no matter how good your accountant is that something you should pay for given what's going on, given it's for some peace of mind? From your perspective. I don't know. I've never paid it in the past.
No,
but
we have had some.
But you are scaring me just in general, because it could be wrong or right or whatever.
The amount of things that actually go to audit are low. As I said, the ATO just automatically changes it and then makes it your responsibility to sort it out. When things go to audit, that's a bit of a different process where audit insurance will cover the time of your accountant to go into bat for you to provide the ATO what they need. End of the day, the client's still going to have to be involved. Two recent examples, again, we have 480 business clients and, maybe 1,000 individuals. So if you go 1,500 potential client audits, we've had 2 in the last 6 months. So the numbers are very low from an actual audit percentage. It's not to tell people not to get audit insurance, but the one did have audit insurance, was a couple of grand worth of our time to go back and forward, global transactions, a little bit of a complicated, ATO just checking some stuff. All good, passed with flying colours, but by the time we went back and forward, our cost to the insurance company was a couple of grand. The insurance might have cost $400. And then instead of paying us $3,000 to $4,000 to do the audit work, the insurance company paid that. So that insurance policy paid for itself for 10 years, essentially. On the other side, we had a smaller client who really shouldn't have been an audit target. His fees for managing this audit with the ATO might be up to about $7,000, no insurance.
Wow.
And it's complex in a sense. He wanted us involved to make sure that we got this right. He potentially could have done it himself, but the ATO agent has been pretty hard on him. So having us as the middleman has kind of softened it a bit. So yes, audit insurance. I mean, realistically, think about the type of business you're in or the type of individual taxpayer you are, and if there is some complexity to your affairs, then for an individual, the audit insurance might be $100. Peace of mind, tax deductible.
Do you see audits escalating based on this technology that's come through? Do you think more will go to audit because of what's going on?
Mate, we are only at the beginning. Honestly, the fact that at the moment we're still getting notices from 2023 when the data points were a fraction of what they are today. I'm asked this question at episode 300 or episode 400. I think that'll be a very, I'll be telling you, mate, we are getting letters daily of stuff that clients have said versus what the ATO knew. It's going to be a really.
And how much is the audit insurance roughly? Is $100, $400?
Yeah, it's from an individual point of view.
Yep.
It could be around $100. From a bigger business group, you might pay $1,000 if you've got multiple entities, family trust, bucket companies. But usually in the middle as well, $300, $400, $500. It's all individually quoted. We can send links. Not an audit insurance plug, but it is available. And look, that's actually probably one that a lot of small business owners and individual taxpayers don't know that they can buy audit insurance to cover them.
Do you provide that, Chase, at Future? Could you?
Sure do. Yeah.
Okay. I'm just thinking in regards to this is obviously heading in a direction where there's going to be more of this just happening just because of what is happening in the tech until it rectifies itself. But it's probably it's probably a small investment given, like you said, that $7,000, $8,000 cost is quite significant. Not to mention the stress involved for a person as well. So you go. Yeah, you start to weigh things up like that.
Yeah, and that one's been horrible. I honestly really feel for this circumstance. It's just, I hate it because from the ATO side, they're not going to get much. It might be a $3,000 win back the ATO's way, but I think about the cost of that employee salary, the cost of my team's salary, the cost of stress and bullshit that our client's gone through. For the ATO get a $3,000 win back their way, it's not economical, and it doesn't make sense. And if anything, potentially this is one where to the ombudsman for the tax commissioner and the ATO, there could be some escalating some complaints here for what actually is viable and makes sense. But this sharing this with you guys wasn't necessarily about fear mongering. It was an understanding of there is a lot of data, there is a lot of things that are going on, and we're in only at the beginning of this world of data matching and ATO compliance. So I just think it's one where education's important. Talking to your accountant, getting it right and asking the right questions. But the digital footprint continues to grow and expand. And if you start to think about where we are now and where we'll be in 5 years and what the ATO and the government are trying to achieve from a big brother and watching point of view, it's only the beginning.
Doesn't it really back up our previous conversations around the complexities of the tax system and like, why don't you just have a flat tax rate? I get why that doesn't work. Even if you had a tiered tax rate, someone earning 50 grand a year pays 5 grand and maybe it's tiered from there, and just get rid of all the deductions. Just lower the tax rates and get rid of the deductions.
Nick, we've talked about it. Tax reform in Australia just hasn't happened for such a long time.
Yeah, massive.
There is finally some ongoing conversations about increasing GST to reduce income tax.
Seeing a lot of that ever since Marty brought it up.
We did an episode on it, and it's the government have finally listened to the numbers game episode. We can see the data in the background. Thank you for listening, ATO and Aussie government. But maybe start to make some change that'll be positively impactful on everyday Australians. But I think you look at other established economies around the world, like in the UK, an employee who does their job doesn't get to the end of the year and then try and lodge a claim for their mobile phone, their internet, their home office, their car, their office expenses, their boots. It's
ridiculous.
You don't claim that. You just you do your job, and if you need to have something, your employer might provide it or they don't, and that's it. And the money that gets in your pocket every week is the money in your pocket. So if you eliminated millions of tax returns out of the Australian, day to day, for all of the basic tax returns were eliminated rather than letting Aussie self-assessment system, and Aussies are pretty I'd say aggressive in a sense when it comes to tax time. People love a refund, and it's a game. It's almost gamified, especially the ones that do it themselves. You jump into some online tax forum and so it's like, oh, my accountant said I was only getting a $2 grand refund, so I did it myself and I got $5 grand. Fucking go me! Like, it exists out there. And yes, one day the ATO will catch up, and I don't condone that behaviour. But like what you said, Nick, if we just removed that altogether from the system and people got more money in their pocket because they paid less tax legally, and that was it.
Yeah,
much better world.
Maybe we could bring it to a forum, because again, you don't want to bring in technology to make things more complicated. You need it to be simplified to a point where it actually works effectively for all parties. And I'm a big fan of that, and everyone will win. So yeah.
We'd love to know hear your ATO pre-fill war stories or any data that the ATO has that you weren't expecting. Feel free to comment on our YouTube, send us the different links, or contact Nick, Marty and I on LinkedIn, where we're pretty active over there. Love having you listening. Make sure you rate, review and subscribe. And until next time.
Well, I just think Nick, myself and Jason are just going to shut down our OnlyFans page after this episode. So if you give us a final wave if you see us. Game over.
This podcast is for educational and informational purposes only. The conversations are of a general nature and do not qualify as financial or tax advice. We recommend before you make any financial decisions, you consult a licensed professional. Individuals on the podcast may hold positions in the companies discussed.